Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you guys. It is February 23rd. We got actually kind of a quiet day today. We have no economic news release scheduled for today. This week's been pretty quiet overall. Next week, we will get a lot more data coming in here, including some inflation data and some housing, kind of a little mixture with retail and such down the road. So we'll get quite a bit of data next week here. So stay tuned. But today, excuse me about that. Headline news: stock market is up. The Dow is up over 150 so far this morning. We do got a lot of Fed speakers speaking today, so depending on what they say, could move markets. But we also got Fed Chairman Powell's giving his testimony before Congress. Investors are going to be listening for this. We had basically with the new Fed chair, they want to see the monetary policy going forward. They've been spooked over the last few weeks over inflation talk and the possibility of Fed raising rates at a more of a rapid pace. They're concerned primarily because, of course, corporations that raises their borrowing costs, which could slow or stunt growth of the economy, even though it's starting to take off a bit more. They just are concerned that we could force into a possible recession sooner than we even really get the economy really off, so to speak. Let's kind of go ahead and jump into the bond market, see how that's playing out. We are doing quite well today. We are still in this we got this lower, the trend line still going down, which is pushing interest rates up. So when the bond market goes down, rates go up. But as you can see, we started off the day higher. We did kind of close a gap that we had open here. But we're on the upper echelon here, so there's a possibility this could get knocked down at some point. We have a little room here to grow, but overall, today's up about 20 basis points. Since I've done this, it crept up a little bit higher to 23 basis points. Again, just be very careful if you're playing in this because we are still in that trend. We haven't broke out of that trend, and that means that we're on the high side of the trend, which we have a lot more space downwards and to reach the lower part of that trend. To break above it's going to take a lot, but it's not looking too feasible to break above the trend primarily because there's just not a lot of demand out there. As we had mentioned this week, we had a lot of C ratings on the different treasuries that were at the auctions. We have the Fed who's doing the great unwind, so they're kind of unloading mortgage-backed securities and treasuries. So there's the demand level is not quite there yet, which is kind of pushing interest rates and these yields up even further here. So the good news is that the 10-year Treasury here, we broke below what became, 2 days ago. We broke above it. We touched it yesterday and came up. Today we're so far down below it. If this can hold, this becomes a ceiling. So for a while, as you can see, this was a pretty strong ceiling, but we broke above it 2 days, and we were above it for 2 days there. And the next level is at 3.04. That means basically if this continued rising, this is going to push, bond market further down, creating higher rates here. And again, this is something we have to kind of watch for and hope that maybe we can keep this on the lower side to keep the rates going. But again, this is just on the lower. If you put a line here, this is just hitting the lower line of the trend. So again, we're not out of the trend. It's not broken the trend yet. So just be very cautious and. It might be a good time to lock in if you are in the middle of an escrow on any refinances or purchases. As right now with that trend, you're getting at the better rates right now. And if anything, rates will probably worsen as we continue going on with this current trend here. All right, folks. So things pretty much that's about it. Rates are better today, which is obviously good news for those who are in the market. But if you guys want to get more data, just come over to Twitter. I do post over there on Twitter at Mike Bjork on Twitter, and hope to see you guys there. Otherwise, enjoy your guys' weekend here, and look forward to see you guys on Monday. Thanks so much for watching, and again, have a great weekend and enjoy the rest of your day. Bye-bye.